Asia by itself is already standing strong, and going into next year, where we've got a geopolitical, storm coming and landing. In the last few years, we've had enormous events, yet QE has mastered it. We think next year we're going to start seeing those some of those geopolitical events start playing out, and they're largely going to be around U.S. elections, around the conflicts in Europe and the Middle East, and Asia. Touch wood at the moment is less affected by that. So as long as the global picture remains relatively rosy, China is still pro-growth instead of pro-security. India is still the darling. The rest of ASEAN continues to do well, and the politics this side of the world remains pretty benign. Then we really think that 2024 is going to be a great time to diversify out of the US exceptionalism and move some money towards Asia and Japan.
Talking of Japan, it's been hitting new 33-year highs this week and has done amazingly well, in fact, surprisingly well for some people this year. But the question is, so much of the good news has already factored in, like, changes in governance, sort of just a structural shift that seems to be underway in the Japanese equity market. What makes you feel it's going to have another leg higher in future years?
Well, Mandy, you're 100% right. The structural shift is what got everyone excited. You talked about the governance. You talked about how the stock market has looked to coordinate with CEOs to really try bring that growth out. You've seen economic structures change over the last few years with regards to labor and employing more elderly, more equal workforce. And these are all, really working well, and we've seen that momentum. I think the next big shift to see the momentum continue is the idea that Japan is still a very, very big economy globally and accounts for, in most global portfolios, less than 5%. I've seen big international portfolios with less than 3% in Japan. That's when you might believe that the US exceptionalism is peaking, or at least it's done incredibly well and maybe it's time to diversify. You want to move some of the asset allocation to another developed market, stable economy, and Japan is looking like that. So we expect flows still to continue to build up the position in Japan. We're talking to US investors, for instance. We say, they say it's expensive, it's done phenomenally well, but they still need to build up their underweight. So we believe that flow will continue into 2024, and that'll be the main driver.
You also said that you liked India, and yes, it's off its highs for this year. What's the argument for India?
Well, India, I think, is going to continue to be the darling with regards to the two biggest economies, US and China. While at the moment, US and China are really looking for ways to mend, India is going to continue to benefit from the idea that the potential tech war, if you would, or focus on dominance in technology will continue to be a big headwind between the two. And India is stepping in, becoming more of an option for the manufacturing hub of the world. We know the manufacturing hub of the world will take a long time to move away from Asia. And we think it is going to shift and continue to shift to India, which again has also gone through some huge structural changes over the years and now is lying in a real sweet spot. And it's not just the equity market. We're seeing the bond market, the local bond market also becoming particularly interesting with further inclusion into big indices. And this helps everything from pension funds to real money to the really big investors say, okay, we need a structural allocation to India. And that's going to make it stickier and keep driving markets even higher.
Gareth, great.